Welcome to Trade Pro. A few days ago, posted a video about an extremely high win rate strategy using this simple indicator, the liquidation levels by Leviathan. And I'm going to be doing a follow-up video right here, but testing a strategy that uses a hard set stop loss and a hard set risk to reward ratio. Because the big issue with that strategy, even though the results were very shockingly good, using a dollar cost average method without a hard set stop loss upon entry makes position sizing very difficult, and it also means that your losses have the potential to be much larger than the winners depending on how you ladder into the position using that dollar cost average method. So with this time around, it's going to be one single entry, hard set stop loss, hard set risk to reward ratio. So there's none of that funny business with dollar cost averaging, not knowing exactly how big a loss is going to be. And so that kind of eliminates those issues. And using the same indicator in a very similar strategy, just minus the dollar cost averaging, we're going to see how this performs. So let's talk about the exact indicators being used here quickly. Talk about the exact strategy, the setup that I'll be testing, and then I'll test it 100 times and we'll cover the results at the end. All right, so to just run through the indicators first, we just have a 50 period exponential moving average set to a 15-minute time frame, and this is on a 5-minute chart, so just keep that in mind. Then we have a 200 period exponential moving average and also set to the 15-minute time frame. Now, the liquidation levels by Leviathan, that's what's creating these red dots. And I did have to change the settings, but first I'll just show you the actual indicator in the public library here. So liquidation levels by Leviathan, Leviathan Capital, highly liked there on the TradingView public library. And I'll show you the change in settings. So I've gotten rid of everything and I've turned on the market order bubbles. What I've also done is change the settings of those bubbles where all of these are set to 3. All right, so small size market orders 3, medium size market orders 3, large size market orders 3. I'm only using the large size market orders. I don't want to see the small or medium sized ones. So I'm just going to be taking the signals based on those large size market orders. All right. And so with this strategy, it's very similar to the last video, which you should watch if you haven't watched that, because it definitely relates to this one. Essentially, the strategy is as follows, and I'll go through a bunch of examples. We'll go just through something like 10 examples in a row. And how the strategy works is if the yellow line, the 50 period exponential moving average, is under the white line, the 200 period exponential moving average, then I'm only looking to enter short positions. And how do I enter a short? Well, price needs to pull back to at least the yellow line. So the 50 period EMA needs to be pulled back to that at least, and then we get a red dot. So I wouldn't take this one right here for that entry because it hasn't pulled back to the yellow yet, but this one here is a valid entry. So we get a red dot, we have yellow under the white line, and that's a valid entry. So that's the entry price upon the first red dot. And the stop loss indicator is going to be used to place that stop loss, and it's just going to be one single entry here. The stop loss indicator I do have set where the multiplier is 5.5 here. So everything else is left default, but I have changed the multiplier to 5.5. The specific one is the ATR stop loss finder by Verified here in the public library. It's just a free indicator. And so I'm just going to be testing a 1-to-1 risk to reward ratio, just a hard set 1-to-1 risk to reward ratio to see how this performs. And of course, that doesn't mean it's not better to use something like a 1-to-1.2 risk to reward ratio or 1-to-1.5 or something different, but I'm just going to be testing 1-to-1 just to see how it performs. All right, so that's the setup right there. We have another entry shortly after that one. This one is a winner, and then we get another pullback above the yellow. Still yellow's under white line, so we're looking for red dots. We get a red dot right here where stop loss is placed to the stop loss indicator, targeting a 1-to-1 risk to reward ratio where the profit target is hit down here. And so we just move on to our next one, and we have another entry. We get a red dot on this green candle here, and as you can see on that entry, we still have yellow under the white line, so it's still a valid short entry. Stop loss goes to the stop loss indicator and then targeting 1-to-1, which is hit over here. And at this point, we have yellow line comes over the white line. So we're only looking for long entries now that yellow is over white, and we need to see price has pulled back to at least the yellow line, which it has. It's gone below, and we get a green dot. That's a long entry on green dots that have pulled back below the yellow while yellow is above white. So we set our stop loss to the stop loss indicator, targeting a 1-to-1 risk to reward ratio where the profit target is hit shortly later. We wait again for another pullback into the yellow, and yellow's over white, so we're looking for longs only. We get a green dot on this red candle here, which also pulled back and wicked through the yellow line, so it's a valid entry. 1-to-1 risk to reward ratio, profit target is hit shortly later. Then we get another one right over here where this is also a profitable trade, green dot, enter on that one, and using a 1-to-1 risk to reward ratio, the profit target is hit. So let's move on to our next example. This is the next trade, and it's another green dot with yellow over white where it hits the 1-to-1 target, and that one is profitable. Then we have another one where we get a green dot under yellow line, and this one also ends up being a profitable trade using a 1-to-1 risk to reward ratio. So we move on after that trade to our next green dot, and yellow is still over white. This one ends up being a loser, but still a valid entry there. And then we have another loss here. This is a short entry where we get a red dot. Price had pulled back into the yellow. Yellow's below white, so we're looking for red dots. Short that, and it's a loss on that one. So we move on, and we cannot take any of these green dots, even though we have yellow over white. Price still hadn't pulled back into the yellow at that point. But we do have a valid one here where price had come below the yellow, so we can take this green dot entry, and this one's a winner. Then we have another winner here, this green dot entry. And we can move on, find another green dot. And here we have another green dot. This one ends up being a loss. We have another one here, green dot, yellow's over white, pulled back, and that one's a winner. Here's another one. This one's a winner. This one's a loser, but you get the point. At this point, plenty of examples here. Another green dot, this one ends up being a winner. And of course, the 1-to-1 risk to reward ratio and the multiplier that I've used on the stop loss indicator, I'm just choosing random ways to go about doing this just to see how it performs. So it doesn't mean that's the best way to do it. I recommend, trying out different risk to reward ratios, different stop loss placement methods, and that's up to you to look further into, but you'll see what the results are for this specific setup. And when I do this 100 back test here, starting now. All right, here's the results after the 100 back-tested trades. So let's cover it. This was tested on Bitcoin USDT perp, and it was done on a 5-minute time frame using a 1-to-1 risk to reward ratio. It took 91 days of price data to find the 100 trades, and out of those 100, there were 66 winners and 34 losses, giving it a 66% win rate, which is incredibly good for a 1-to-1 risk to reward ratio. I think better than any other 1-to-1 risk to reward ratio that I've tested. So we'll check it out on the strategy ranking spreadsheet to actually confirm that. But the most wins in a row was 13 and the most losses in a row was 6. The gain on the account, 32%, assuming a 1% risk per trade and not compounding. So 32% gain on the account, incredibly good for a 1-to-1 risk to reward ratio, where normally using a 1-to-1, you don't see a very high gain on the account figure compared to the 1-to-2 risk to reward ratio strategies, where typically you see those bringing in a much higher gain on the account figure, even with a much lower win rate. So let's put this onto the strategy ranking spreadsheet and see how it stacks up against other tests. All right, here it is on the strategy ranking spreadsheet, falling at spot number 41 for gain on the account figure over a series of 100 trades. And that's out of 97 strategies I've tested for the channel so far. So this one did really well, and I think it's the highest win rate using a 1-to-1 strict to risk to reward ratio. So if we kind of scan through here, that is the case. So if we compare it to some others using a 1-to-1, 63% win rate, 62, 61%, and 59% here. So here's another one, 53%. So this one did really well, the highest win rate I've seen with a 1-to-1 risk to reward ratio so far. And if we compare it to the other strategy I tested a few days ago with a 77% win rate, where it had a dollar cost average method using pretty much the same strategy, but in a bit of a different way when it comes to stop loss and take profit target method. It did really well with a rigid 1-to-1 risk to reward ratio, set stop loss upon entry. So this one's definitely very promising, and I'd say that this indicator is quite good. So these market order bubbles that it's placing seem to do quite a good job of getting into trends at a discounted price, which is normally the goal of trend trading. Try to enter into a trend at a discount and get a move in your favor to get profit. So this one doing really well, and definitely a cool indicator that is for free on TradingView. So very cool. And if we take a look, kind of comparing it to that other strategy, it did take a bit longer, so 91 days versus 60 or 76 days, I should say. Gain on the account, much less. But this one, of course, I talked about the issues with it. You can go watch that video. I pinned a comment on that other video also talking about the issues with that one. But this one also is very promising. So not to discount this strategy, but personally, I wouldn't feel comfortable entering into a position without a hard set stop loss upon entry to use proper position sizing. And this one just had, a variable method of taking the loss, although, it had a strict system in place of where you have to, admit defeat and take the loss, but you don't know exactly how big that loss is going to end up being. So that becomes a huge issue when it comes to position sizing, and also with the dollar cost averaging, trying to do it the right way. Very difficult, hard to keep completely objective. So that's it for this one. Thank you guys for watching, and hopefully it's a good follow-up for this one where there were some issues. So this kind of eliminates all those issues and still shows very impressive results, giving the highest win rate for a 1-to-1 strategy that I've tested so far. So be sure to like the video, comment down below for the YouTube algorithm, and subscribe if you haven't. But thank you guys as always, and have a great day.